Most traders are reading structure wrong and it's costing them. In this video, I'll break down a new way to read market structure using candlesticks step by step. By the end, you'll have a clear plan to trade with confidence. Let's get into it. So how can we use those candlesticks to our advantage when we're looking at marking up our structures? Well, this new way that I'm using now in 2025 and going forward with my trading, you're going to learn exactly how you can do it yourself watching this video. Now, of course, if you want to learn this in more detail, take it even further with structures and understand the liquidity side and balances and supply and demand, the 90-day profit trading system is currently open for 5 enrollees. Once they are gone though, the waitlist will then reopen again. You can learn more about that. The link is below in the description of this video. What we're looking at here, let me get my drawing tool, is that we have a bullish move, a pullback, a bullish move, a break, bearish, pullback, continuation. Now that's quite easy for you to see and understand here. Looking at this chart, we have a break to the upside, a break to downside, a break to downside. So we've gone from a bullish trend into that bearish trend. That is a reversal in the market. Now, this is easy when the candlesticks look like this. I'm going to tell you now, they never look like this on the chart. You never see them looking this easy to trade with. So don't expect it. What you need to understand now and take away from this video, what I'm going to show you step by step in this video is exactly how to identify your correct swing high, swing lows, and break a structure using this technique. And what it is understanding the candlesticks on the chart. This is our first low we see in the market. We see the push away. What's going to indicate a potential pullback and a swing high form, which will be this high here, is you need to see a bearish candle. Now this can either be a bullish or bearish candle here, closing below of that previous candle. Once you see a body close below this low, this validates the swing high and this becomes a current swing high in the market. Now, if you don't get this on a pullback and you just see wicks, you don't get a valid close, that is not a valid swing high. Let me say that again. If we don't see a valid close below a low with a bearish candle, we don't yet have a valid swing high. And it's just a simple pullback for continuation with that move. Now, a lower time frame, you're most likely going to see a trend, with this being a run on a higher time frame. Now, more of that we can do in future videos, understanding structure with the trends. But this is how you identify a swing high in the market. Now, the opposite is true when we're looking for that swing low. We have a swing low here, but do we know if it's valid yet? Well, the only way we know this swing low is valid is once we see the opposite. We see a close. Again, this can be a bearish or bullish candle. We see a close with a bullish body close above the previous candle high. Again, we must see a body close above the previous candle swing high, okay, to create this swing low. So this high must be closed with a body close. The same as we see here, this then creates a swing low in the market. It's a valid swing low once you see this. Now, obviously, price can go on to break that high, which creates a break of structure. That's a valid break of structure. We then have a valid low in the market. We follow the candlesticks until we see what? Until we see this. We see a valid close back down below this low. That then gives us a valid new swing high in the market. And that gives you your current trading range. That's what it's all about. It's understanding the use of the candlesticks on your chart to identify valid break of structure and a valid trading range. If you don't have a trading range to trade from, how do you know your directional bias? How do you know where you're looking to trade? So that is the simple procedure. Okay, we'll mark it out now correctly on this chart here. Okay, so this is a valid break of structure. Why? Because we see a valid low in the market. So this is a valid low, which is created. Then we have a valid high created here once we see that bearish close and below that low. And then we get this low being our range low breaking to the downside. Okay, so we have a shift in direction. We were bullish and now we've gone bearish. So what do we look for a valid low? We look for what? A bullish close above the previous candle's high. Okay, so this is your valid close up, which creates a new valid low in the market. We can then identify from here, price closes down, and we have what? We have a valid close below this candle's wick. That body close identifies a valid swing high. That becomes a new swing high. This becomes a new break of structure. That is the start of your trading range. Your previous range was this high to this low. That was your trading range. There's your pullback, and we just actually happen to have an area of imbalance there. That price comes off and we continue to go lower. The process is simple once you understand it. If you didn't understand any of this, go back, rewind, watch this part of the video beginning over and over until you understand the concept. Once you understand it, when we go through now to a price chart and apply this to a price chart, you'll see exactly the process you need to follow. So we'll quickly recap what we've just been through. To understand a valid swing high, we must see the body closure of a bearish candle below the previous candle's low. And to find a valid swing low, we must see a body closure of a bullish close candle above the previous candle's high. So now you have a good understanding of the basics of understanding this technique with the candlesticks. What we're now going to do, we're going to go over to a Euro-Japanese Yen daily time frame. I'm briefly going to go through how we mark this up and it looks like on an actual price chart. So here we are on a daily time frame. And when you're applying this, we can just start anywhere on the chart. We're actually going to just mark it off here. Okay. Yes, we saw the previous price action, but doesn't really matter when you're applying this technique. We go in closer and we're going to do what we just went through. Okay. Apply that area. We look back. Where do we see a previous bullish candle? Okay, a bearish candle closing below a previous low. Does this candle close below that low? No. Does this candle close below that low? No. We keep looking. Does this one close below that candle's low? Yes, it does. That means you can mark this off as a valid low. And we're looking to see where did that break out. Well, we did have, okay, back here, again, this is a valid low where we see a breakdown. And this is a break to downside. This candle here, if I zoom in, we can see it actually closed above this previous candle's high. That meant, let me mark it off, that became a valid swing high. Now, once we see this candle here closing above this high as a break of structure, then we look back for where we see our last low, and this is our valid low. So that's how we look at the reversal point. Now we move higher. We're looking for the close down. Okay, that's going to create what? It's going to create our valid swing high. We don't have one here yet. So right now, I can mark this off as a current daily low in the market. We'll get rid of this at the moment. So our last break of structure was, I believe we had a break here, and it was this high. Just double check it. There's our break structure. So we're looking now for what? Okay, remember, we're looking for that bearish close. Now, when we're doing a bullish move, we're using those bearish closes, okay, to find the low and to find the high. When we're doing the bearish move, then we're using the bullish move. So let's just go forward with a candle. So have we closed down below the previous candle's low? No. So we don't mark anything off yet. Again, have we closed? No. Again, we still haven't closed below the previous candle's low. So if price will continue higher from here, it's just showing me a pullback continuation on this time frame, and there's no actual new swing high to be formed. Okay, so again, let's just see what happens. Now we have a valid close here below that low. So now we have a valid swing high in the market for the daily. And that is how we look at this. So because we have this move, this is our new trading range from this high to this low. Yeah, we have an area of demand down here, but this isn't a valid high until we see this candle closing below this previous candle's low. Hopefully it is sinking in. You understand how simple it is reading these candlesticks. We'll go forward again Okay, we continue to push down. We've gone into, we're now pushed through. So now we have what? We have a new break of structure. So we've broken through this previous low here. Why? Because it's the previous low. We see this candle closing below that low. Now we have a bearish move. This is where we can look at applying the opposite. Now what do we look for? We're looking for the first time we see it close up to give us a new valid low. But what about our current daily high? We look back. This is the last time we see it close above. That creates this as our new daily high. That's our break of structure, our daily high. We continue forward. We're looking for a close up. There's a close up. That creates our new low. So my trading range is now bearish from this high to this low. And we can either look to trade up against that range, or we can look for pullbacks for continuations. It all depends on your higher time frames. Let's continue and see which way we break. Let's go forward. Let me just play that forward instead. Okay, so we're going higher into the areas of supply, and nearly we broke out. I just want to say, if we see a wick through, that's not a break of structure. It's just a sweep in the market of liquidity. Continue. Right, now we've got a valid break of structure there. We don't do anything until we see that candlestick closure. We've broken through that high. That was our previous trading range. Now we've got this breakout. This is a new breakout. We can look first for our current low in the market. Well, if I just go in closer to those candles, let's go right in. Where do we have a close down? Well, from this high, we can see this candle closes down. We then continue to close down, and we even close down this last bearish candle. So that creates our current low in the market from this low. We then break out. What we're looking for, again, we're looking for the first closure down. This is a close below this previous candle's low. So let's just mark this high as a valid trading high, and we can use this as our break of structure there. So there's our break of structure. That's our current trading range. Okay, very, very simple technique. And we do this across multiple time frames. So there is our current swing high to low. That's our current trading range. You're looking for a pullback into these areas of demand, okay, for continuation higher. Let's see what happens. The market pulls back and we start to react off this area of demand, okay, this area of imbalance. If we now see a close back through the high, that's a valid break of structure again. If we go all the way back down, we close down, that's a reversal. So look where we go. Again, we have nothing. Now we have a valid break of structure. So now what we can do, we can take that away and we mark this off as a new break of structure. So this area of demand is where price has bounced from this area of demand. Now, what about our current swing lows? We can mark this off. Well, there's the last time we see a close below a previous candle's low, and that creates this as a swing low. And now to mark the high again, we wait for that close back down. Okay, now we've had a big outside candle. We need to see it close below the low we've got before we can mark it as a high. Now we get a close below this previous candle's low. Now when we're marking it, we're not marking from this high, we're marking from the main high, which becomes this high here. Okay, we're not using this candle at close, we're using the previous candle's highest point. That gives you your trading range, okay, from this low to this high. That's your current trading range. Prices come back into your closest area of imbalance where we have an area of potential demand. So if you're to see a continuation from here, you want to see the market reversing now back to the upside. And you use multiple time frames here to time your entries. And we'll look more on that in future videos when we go through understanding these types of structures. But let's see what happens with price. Okay, let's go fast forward this bit so you can see what happens. We're going sideways and we break through right there. So once we see a break again to the upside, we can mark off what? Our new break of structure. So that's our new break of structure. We look back. Where's the last time we see a bearish close down? Is on this candlestick here. And again, we wouldn't mark it from here because we've got this wick where we see that sweep. We would mark it from this low. Okay, That's your closest low in the market. So that's your valid low. And again, you just continue until you get the bearish close down for your, there you go. There's your bearish close down for what? For your swing high. Now this would be this move here, and this would be your low. And that is it. That is the way you're going to look to use this simple strategy to help identify your market structures and your trading ranges. Hey traders, we'll get back to the video in just a second. But if you're over 50 and serious about achieving financial freedom before retirement, listen up. One of my students, Danny, had lost nearly 300,000 trading on his own. After joining our 90-day profit trading system, he's made back over a quarter of those losses using the mechanical strategy we teach, and he's just getting started. This program is designed for traders like you, 50 and over, who are ready to finally trade profitably. With limited spaces available, you'll get personalized support and lifetime access to our community. If you're serious, click the link in the description below to secure your spot today. Let's get you on the path to financial freedom. All right, let's get back to the video. Make sure you check out this video popping up next, which will go through how we look and mark up these charts as well each and every week.